Hey you guys, welcome back to my channel. It's your girl Lisa. I want to take a moment and show my appreciation to everyone that is supporting this channel. I mean, I am blown away by your support. Oh yeah, chop kiss. You guys are just doing great. But if you haven't joined, please, I will urge you to subscribe and like, and let's go together. Don't wait for it to be too late. And then you say that, oh, I was there when she started, but I didn't. I don't want to hear that. If I didn't see you from the beginning, then you were not part of the story. So please, subscribe. In the last video, I gave you an overview of what insurance is in Ghana here. And I told you about some principles that guide our operations. So if you haven't watched that video yet, I urge you to quickly go and watch it so that you understand what we're going to be doing today. In this video, we're going to be elaborating on those principles. So don't go anywhere, stay tuned. There are 6 basic principles in insurance, but just recently I have come across a new one which makes it the 7th one. So we'll go through each one of them and then explain to you how it affects the operations of insurance. Kindly note that I'm only going to be focusing on how these principles affect general insurance business and not life insurance. Remember, my expertise is in general insurance. Do you have a property you want to insure? What interest do you have in that property? Is it for you? Are you sure it's yours? Okay, so that brings me to the first point, insurable interest. Insurable interest means that you should have some interest in the property you would like to insure, such that in the event of a loss, you will be financially affected. So for instance, you cannot just go and insure any car you find by the roadside, just because you found it there, no. In other words, be fearsome. That's just by the way. 2 is the principle of utmost good faith. It legally compels both parties entering into the contract to act honestly with each other by not withholding what we call material fact from each other. In this case, material fact will be any information that is critical in helping decide on the contract or on the terms of the contract. So an example here will be someone who has refused to disclose their medical condition to an insurer, especially when they are buying a travel insurance policy. That way, when you travel and something happens, that claim will have some issues. Likewise, on the part of the insurer, everything you need to know about the contract, about the policy, is embedded in what we call the policy document. So it is important that you read this document so that if there's any particular thing you need to be included in the policy document, you would immediately draw their attention to it. And if they insist that it cannot be done for you, then you know what to do. You have gone to the insurance company, you two have been honest with each other about material facts and all that. The risk has been accepted, but now you have a claim. So this brings me to my next point, which is the proximate cause. This would be the primary cause leading to your loss. So for instance, when you're walking by the roadside, there are drivers driving by, then suddenly a drunk driver hits a car, and in the process, the car hits you. So in this case, the proximate cause would be the drunk driver hitting that car, and in the process, the car hitting you. The most important thing you do afterwards is to check if whatever caused you that loss is covered under the policy you have bought. The 4th point is the principle of indemnity. If you're liking the video so far, please don't forget to subscribe. Just click on that button just by my name. You see Lisa, you see subscribe. Just click on that button right now. I'll wait for you. I hear a lot of people say they don't benefit from insurance. Okay, maybe that is different from when you say you don't profit from insurance, but insurance is not for profit. The principle of indemnity basically means that you are being put back to the state you were just before your loss. So if you were driving, say, a Toyota Elantra, for instance, you're using a 2017 Hyundai Elantra. When there is a claim, an insurance company is not going to buy you a 2023 Hyundai Elantra. You'll be put back to the state where you were just before the incident. That would quickly bring me to my fifth point, which is the principle of contribution. Perhaps you think that you have been smart, you go to multiple insurance companies, insurance A, B, and C, for whatever insurance products that you have bought from them. And then there is a claim. This is how contribution works. Each of these insurance companies will come together to compensate you. This quickly ties in with my next point, which is the principle of subrogation. Where only insurance A covers your claim or settles your claim, what you have done is you have waived off your right to insurance A to legally go to insurance B and C to ask for recovery. Now to the last principle I recently discovered is the principle of minimization. And like the name says, the insured must try their best to minimize the risk of loss on their property. All too soon, we have come to the end of today's video. If you have any questions, you can always put them in the comment section and I will address them in the next video. See ya.